Welcome back. It's time for your call sheet, where we look at the topics driving the trading day ahead. The crew members today: David Zervos, Chief Market Strategist at Jefferies; Ryan Dietrich, Chief Market Strategist at Carson Group, both are CNBC contributors; and Jose Torres, Senior Economist at Interactive Brokers. Great to have all of you here. A lot to get through. Jose, you're sitting right across from me. I'm going to start this conversation with you. Inflation, CPI on tap today. What are you watching?
Yeah, well, I think that this stock market rally has been terrific. Now, I think going forward, though, we are going to be having to withstand higher rates because not just this report, we're expecting 3.7%, Morgan. May, June, and July are likely to come in above 4%, coinciding with the new Fed chair. It's going to be interesting to see how investor sentiment holds up against that backdrop, alongside what's happening with President Trump and Xi Jinping meeting up soon, as well as, of course, oil being above $100 and tensions flaring in the Middle East.
Okay. Speaking of Warsh and going through the Senate confirmation process here, David Zervos, I mean, you've been writing pretty extensively about this, rates versus balance sheet. How does all of this factor into the inflation conversation as we look through the end of the year?
I think people are looking through the inflation, Morgan. We know that this is a temporary move. We don't want to use the other T word, but we know that the market sees it that way. All the inflation expectation data, whether it's TIPS market or survey data, suggests that. The yield curve suggests that. Any measures of term premium suggests that. So we know what it is. And I think we're going to be talking about a lot of lower oil prices by the end of the year and possibly even earlier, especially if things like sanctions across different jurisdictions, not just Iran, but possibly Venezuela and even Russia and Ukraine start to become the focus as we get through into the summer months. So I don't think the market's getting hot and bothered about a big headline move. They're going to look at the core. They're going to make sure that the trends in the core are still what they had expected, some of the housing stuff being weak. And as long as that's the case, I think it'll be a much more of a nothing burger on the headline than anything else. And that's what I expect.
Yeah, I mean, it is interesting, Ryan. We've got S&P and NASDAQ trading at record highs, sitting at record highs right now. Even as crude prices are higher, treasury yields are higher, and the VIX, at least in trading yesterday, it's still subdued, but ticked higher as well. I mean, the read-through here is perhaps, well, I guess I want to hear your thoughts on this, but how much is AI build-out powering this?
Well, first off, good morning. Thanks for having me back. Listen, we all saw the GDP number a couple weeks ago, right? 2% GDP in the first quarter. Like half of that was coming from the AI build-out the last 5 quarters on average. So that is, we know that. But, I want to talk about something Jose mentioned. He mentioned investor sentiment. And I think it's amazing, Morgan. Everything you just mentioned, hitting new highs, up 6 weeks in a row, up 16% these last 6 weeks. Yet you look at sentiment, and I get to travel the country and work with clients all the time. People aren't that happy. I mean, they really aren't. Look at the cover of the New Yorker, right? It's George Washington all beat up, talking about red, white, and kind of blue, right? We barely saw any more bulls in the AAII sentiment poll. And then one more, look at hedge funds. I mean, hedge funds are really decreasing their allocation to tech over the last 2 weeks, like the most we've ever seen. So there's pockets of optimism, yes. But with stock market hitting all-time highs, expectations are so low. I think with continued good news, kind of like you guys have been talking about this morning already on the economy, I think this bull market's alive and well.
Yeah. I mean, certainly semiconductors have been surging here, Jose. And Bespoke yesterday notes the stocks has moved up 60% above its 200-day moving average, and that these are levels that have only been seen 2 other times, July of 1995 and March of 2000. I mean, you're starting to hear these comparisons to dot-com bubble. I mean, warranted?
I think it's mixed. I think overall, the earnings story is very buoyant. And one thing that Ryan was talking about is overwhelmingly, we're seeing some of our customers caught off sides by this significant move that occurred so fast. No one thought that the economic fundamentals that have worsened somewhat from the beginning of the year to now would be accompanied with this surge in earnings expectations from the semiconductor space. So to the extent that area can sustain that level of buoyancy, then I think we can go a lot higher. But in the past, we've had some cyclicality with memory chips and those kinds of technology areas. So that's something to watch.
Yeah, certainly that's the debate on whether we're entering a more secular period for the likes of Micron here. David, want to get your thoughts as we do look to this Trump-Xi meeting later this week on the geopolitical stance of everything and how this is pricing into the markets and what it means not only for investors, but for the economy overall, too. Going back to your comments about sanctions, I think in particular.
Yeah, I think we have a president that would like to do a deal. He loves to do deals. I think he's going to be either touting them or teasing them or closing them. And he's got a lot of CEOs from a lot of very important companies with him. This is a business-friendly administration. That's a lot of what this rally, I think, is built on. It's not just AI and productivity. It's part of what's been touted in the one big beautiful bill, the deregulation, all of the things that we've listened to since this administration began. And I think we're going to see that in action. The market could like it a lot. I think you've got Secretary Besson over there, also working with the Japanese, the Koreans. There's just a lot of really good news for the market when it comes to deals and investment. And I think the market's going to key off of that. And it has keyed off that. I think it's really pushed aside a lot of the geopolitics related to things like Iran or other areas, like still the Russia-Ukraine situation, which is terrible. But I don't expect geopolitics to weigh on this market. If we were going to go down that route, we would have gone down that route that last couple months.
Okay.
And we just haven't.
Ryan, we got 20 seconds left. Final words, final thoughts.
Well, let's think about this. Up 6 weeks in a row, up over double digits during that. The only 9 other times in history it's happened. 1 year later, we've been lower only once, and that was 70 years ago. So this strength we've seen, I think it's going to continue. And one more quick one, probably only 5 seconds. The market rarely ever peaks in May or June, only twice in history. So again, I think this summer rally is going to continue here.